I'm going to follow up and ask you all to respond to the question raised by Senator Kyle. What's the purpose of the tax code? Is it to raise revenue to support essential government functions, or do we see it as being a major mechanism for wealth redistribution? I don't mean that that is a pejorative. If it's the latter, is that an appropriate role for the tax code? And I'm going to confer an honorary doctorate of economics on all of you, so you're all doctors. That'll be from the University of Kansas. And if you want to go on with a PhD, we'll add in income redistribution. So you're all doctors now. Let's just start from Dr. Shavero.
Well, I guess I am a doctor
like Dr.
now.
Shavero,
well, I am. Yeah, no, it's I'm a Juris Doctor, but then every lawyer could say so too.
Right.
If all we want to do is raise revenue, we don't care at all about the distribution of wealth, the obvious thing to do would be to have a uniform head tax in which every American, be it Bill Gates or a homeless person, pays exactly the same amount. No one agrees to that. So at this point, we're really talking in matters of degree, where really the question, the phrase that's often used is ability to pay, how well off one individual is, how able to contribute to the cost of government compared to another person. And as soon as you back off believing in a uniform head tax where everyone pays the same thing, which actually Margaret Thatcher had an experience with that I recall, then we're really all in the same ballpark and not fundamentally disagreeing about what the enterprise is about.
Dr. Hodge?
I don't believe the tax code should be used for social and economic engineering. I think the tax code has one purpose. As you mentioned, that's to raise a sufficient amount of money for the federal government. But economic growth ought to be the key question here, is will we and do we or can we have a tax system that is conducive to long-term economic growth? The OECD released a very important study 2 years ago showing that high corporate income taxes and high personal income taxes are the most harmful taxes to long-term economic growth. Unfortunately, as we've talked about here, the United States has one of the most progressive personal income tax systems, and I think, as we all know, we have one of the highest corporate income tax rates among OECD nations. Both of those are contributing to our slower economic growth.
Dr. Ehrenheim?
I particularly appreciate it since I like getting my PhD a couple years
I know
early.
you're close. You're very close.
I'm working on it. I mostly agree with Mr. Shavero that I think what we want is for our tax and spending systems together to accomplish a set of social goals. I think we've agreed that those goals include helping families who are coping with situations of hardship, providing a safety net.
Right.
And I think we've agreed that people at the top can afford to pay more for that. You can call that redistribution or not, but it really does imply a progressive tax system.
So you're for both, right?
Yeah.
Okay. All right. I got to move on because I'm running out of time, and I have a question for Dr. Hodge as well. Please, Dr. Reynolds.
Taxes don't redistribute income; they just reduce it. The redistribution occurs through refundable tax credits, such as the EITC, which, interestingly enough, although it's $55 billion, is not counted in most of these studies of income inequality. It's like it didn't exist. Neither are most transfer payments. So it isn't taxes that don't redistribute income. The redistribution occurs through spending programs, which are huge. Transfer payments are now over $2 trillion. Private wages and salaries are about $5 trillion. Again, we've got to take that into account. Taxes aren't redistributive.
I appreciate it. Dr. Hodge, again, this is a subject that my colleagues have said it's useless to bring up. I don't know how many times they've told me that. I'm going to do it again in the 35 seconds that I've got. Actually, I'll go over. I'm sorry about that, Your Eminence. In 2007, federal deficit stood at $161 billion and had declined from a high of $412 billion in 2004. The question that I have is that I thought that some of that was a result of the 2001-2003 tax relief. I don't say cuts, I say relief. Mr. Hodge, can you expand on the idea that lowering tax rates does not necessarily result in a loss of revenue? The federal government can instead increase tax revenues?
I think when you lower the most harmful taxes to the economy, and that's high marginal tax rates, as we did by lowering the top personal tax rates as well as capital gains and dividends, the economy can grow. And to some extent, that will help replace some of the offset some of the revenue losses that might be expected in a static basis. And I think while there's a lot of debate on whether tax cuts sort of pay for themselves, I do think that lowering marginal tax rates can increase economic growth, and that can have a positive impact on revenues over time. And I think we saw that during that period of time.
I appreciate that. My time has expired. Thank you.